Good morning and welcome to Market Day Report. I'm Chris Swift. I'm anxious to see how the markets are trading because we were a little bit firmer when we came in this morning. So let's see how we're going to start our day here. And with the corn market, we are still a little bit firmer with the December contract, 408 up 3 1/4. March up 3 1/4 at 426 3/4, all the way out to July at 445 up 2 3/4. See what our soybean market is doing. It was a little firmer as well. Got Novi's up 6 at 1006 1/2, been as high as 9 1/4. Jan beans 1024 1/2 up 5 1/2, and May up 5 3/4 at 1054 1/2. Chicago wheat this morning a little bit firmer as well, with the Dees up 8 1/2 at 587 3/4. March wheat up 8 1/4, 606 1/2. New crop July 621 3/4 up 7 1/2. Kansas City hard red winter wheat firmer as well, up 8 on the Dees at 596 1/4. March up 7 3/4 at 609, and July up 8 1/4 at 619 3/4. And let's take a look at Minneapolis spring wheat. It's firmer as well. Dees up 6 1/4, 622 3/4. March is up 6 1/2 at 644, all the way out to old crop July 661 3/4 up a nickel. And due to our hurricane that's coming through, and let's see what it did. It put a little premium on the contracts yesterday. They're kind of softening a little bit here. December down 23, 69.38. The March contract down 25 at 70.92. Let's ask Brian Hoops to come in this morning. Brian is with Midwest Market Solutions. And Brian, I know we've got a WASDE report this morning about 11 o'clock, and we discussed that. You told me that we had some of the harvest data, actual harvest data going to be in that. Any differences that you see right now of what's come off the combine?
Well, good morning, Chris. Yeah, we're going to get some differences, I think, in this report. The yield, the expectations for yield is very small in this report. Very small, smaller corn yield, slightly larger soybean yield. And when you have really small ranges like that, you tend to miss it. In fact, this report has had a history of coming in higher than expectations. 10 out of the last 12 years. 21 out of the last 26 years, we've seen those numbers out of the USDA come in better than expected or higher than expected. So that's kind of the tendency we're going to run into. And it's probably partially due to that switch from going from actual test plot surveys from farmer surveys. So we're going to see a variance here, and it's probably going to be reflected today and possibly in a negative way. Now, we are higher early this morning as we rallied into the export numbers. We had a private sale of corn this morning, 118,000 corn to an unknown destination. Now, a lot of times you'd say that unknown destination ends up being China, but in this case, it's probably going to end up being Mexico. Mexico seems to buy corn in kind of a odd quantities rather than China, who's more of they rounded up. Like yesterday was 132,000 beans. This was 118,626 metric tons. So it was kind of an odd number. And when you look at the export sales this morning, lower than expected in corn, good soybean sales, wheat sales are pretty decent. Next week's sales look to be pretty slow because of that hurricane coming in up off the Gulf. We're going to see a slowdown in our exports. There's pretty much all activity has been shut down in the Gulf of Mexico, and that's going to very much limit how many products that we're able to sell.
No doubt, and I'm sure that'll move up the Mississippi River as well as the flooding comes in. I'm glad you mentioned that about the corn and kind of these areas here. We're going to come back and talk livestock, and we're going to include that in there. So y'all stick around and stay with us. We'll be right back talking with Brian Hoops. Risk is inherent in commodity production. It can't be eliminated, but can be managed. With over 30 years of experience, Swift Trading Company has the knowledge and provides the service to meet producers' needs. For more information, visit swifttradingco.com. All right, welcome back. We saw the livestock trade a little bit higher yesterday as we came into the close. I'll be anxious to see if they can add to some of those. Saw October fat cattle up 62 at 176.95. The Dees contract up 80 at 177.22. Feb up 80 at 178.32. Our feeder market had put on some premium too. It's catching up to the feeder cattle index, which yesterday's reading was a little bit higher, not much, 243.04. So SEP at 240.55. We still got a $2.50 basis spread in that will be closed in the coming weeks here. October up 210 at 237.50, and Novi's up 175, 234.02. And again, starting out in next year, we've got the real big discounts out there, 229.55 Jan and 229.25 on the March contract. Take a look at the hog market. It was a little bit firmer as well yesterday, up $1.20 on the ox at 79.75. Yesterday's index reading was at 85.56. December at 72.30, up $1.15, and Feb up 77 at 75.82. I want to ask Brian to come back in again. Brian, I know that what tends to not be so good for the farmer out there can be really good for the livestock producer, and that kind of seems to be where we are right now with a little bit cheaper input costs. Is it time to start fixing some of those costs, or are we going to see another new low in the corn market and use that? But it seems like we're pretty cheap in comparison to where we have been in times past.
Well, you're right about us in comparison. Can we get cheaper? Well, certainly think it's possible. We'll have a little bit of those answers today. But generally, when you get into the harvest time frame, that's when you make your lows. September, October, that's also when you see your widest basis. So that's a perfect time for the livestock producer to accumulate their inventory that they're going to need for the year. Get as much product purchased or at least booked at wide basis as possible and as cheap as possible. So there's some opportunities coming here for that livestock producer to do exactly that. It shouldn't be a supply issue this year going forward. They should have plenty of supply to work with. Looks like we're going to have probably the third largest corn crop ever in history, no matter what the USDA says today. And you look at what happened yesterday in the cattle market. We did have a little bit of cash cattle trade leak out. Southern Plains steady to $1 lower, but yet we had futures market rally despite lower cash trade and despite softer cutout values. Part of that was probably because of that big, wide sweeping rally in the equity markets yesterday, and they are a little bit firmer here again this morning, and that should provide some initial support. And that's good because our beef sales this morning, not very good, only 11.4 million tons. Pork sales were decent, 29.7, but the beef sales is what's concerning. Just we're not finding that demand that we need to work through some of these larger supplies of not only the cattle weights, but also just numbers of cattle coming at us.
Yeah, and it seems like we got the rest of this year to have to deal with. I know cattle on feed numbers are very elevated in comparison to what they were in years past. And I even saw somewhere where we're about 1 million head more on feed than we were in 2016. So I find it interesting that we are still able to find that. But one, unexpected aspect of that is we are now have pulled really hard on our Mexican and Canadian cattle coming down in from there. Wonder what we'll do when they start to really dry up.
Yeah, we're hearing that the imports are going to start slowing down, which is, a positive for U.S. because we have not only imports of Canadian, Mexican cattle, we also have much heavier weighted cattle than what we had a year ago, and so that even that heavier weighted cattle makes up a lot of production numbers. Just based off of you don't have to slaughter as many animals because you have the heavier animals to work with. So if we can get into a tighter number situation, the imports start to dry up. That's when we can turn this market around, and we're going to have to do that, and exports are going to have to be part of that equation.
Absolutely. Brian, really do appreciate you taking the time to be with us this morning. As Brian Hoops, he is with Midwest Market Solutions. And Tammy, good morning to you.
Good morning. Happy Thursday, Chris.
Absolutely. To you too.
Glad
We'll put you get wet here in a little bit. So.
Tell you what, I just was taking a sneak peek over at that radar that Jeff's working on, so we'll get an update on that here in a little bit too.